So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to be going through the ultimate quick guide to a bull call spread strategy. Now, a bull call spread option strategy is a strategy that is defined risk, where you are buying one option in the money conceivably and selling one option contract out of the money for a net debit. Now, this is, like we said, a bullish strategy. So your directional assumption is that the underlying stock will make a move higher in order for this strategy to potentially profit. Now, where you place your bull call spread strikes is then reflective of how aggressive you want to trade the particular stock or how far you think the stock might move. Now, in our example, we suggest that you usually use these strategies by buying one option in the money and selling one option directly out of the money and trying to create a spread around where the stock is trading at the exact moment. Now, if you're a little bit more aggressive and you're trying to take on a little bit more risk, you think the stock might rally quickly and you want to capture a bigger profit, you would then buy one option contract out of the money and then sell another option contract out of the money as well at a higher strike price on the call side. Now, in either case, this is a net option buying strategy, so it's not a strategy that we typically suggest people use all the time. You would try to use this strategy in a low implied volatility market after a stock has made a significant move lower and there's a higher likelihood of a bounce or a rally up. As always, hopefully this helps out. If you have any questions, let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.